So, you're holding onto some valuable crypto like Bitcoin or Ethereum. That's great, but let's be real. It's probably just sitting in your wallet. It's not growing, it's not earning you anything. And with inflation, it might even be losing a bit of its buying power over time. But what if you could put that crypto to work? What if you could turn those assets from just sitting there into a new stream of passive income? Well, you can. In this video, I'm going to show you exactly how wrapping your crypto can help you earn extra rewards in the world of decentralized finance. All right, so you've got your Bitcoin. You're holding a piece of the most secure decentralized network on the planet. But here's the problem. The Bitcoin blockchain is kind of like its own isolated island. It doesn't naturally communicate with other blockchains, like Ethereum, which is where almost all of decentralized finance, or DeFi, is currently happening. This means your Bitcoin can't get in on all the action in DeFi, like lending, borrowing, and trading on decentralized exchanges. Think of it like having gold bars locked away in a vault. They're super secure, but you can't exactly use them to go invest in the stock market. Your assets are safe, but their potential is totally locked away. And you're missing out on some serious rewards being generated every single second in the DeFi world. This is where wrapped tokens come in to bridge that gap. A wrapped token is basically a stand-in for another cryptocurrency from a different blockchain. The easiest way to picture this is like exchanging foreign currency. When you travel, you might swap your US dollars for euros. You still have the same amount of value, just in a currency you can actually use where you are. Wrapped tokens are pretty similar. The most popular example is wrapped Bitcoin, or WBTC. To create it, real Bitcoin is sent to a custodian. In WBTC's case, that's primarily an institution called BitGo, which locks the BTC in a secure reserve. For every one Bitcoin they lock up, one WBTC token is created on the Ethereum blockchain. This WBTC is an ERC20 token, which is the universal standard on Ethereum, making it instantly compatible with thousands of different DeFi apps. And since it's always backed one-to-one by real Bitcoin, one WBTC should always be worth one BTC. This whole process acts like a bridge, letting you move the value of your Bitcoin into the booming economy of Ethereum. Okay, so you've turned your Bitcoin into WBTC. Now what? How do you actually use it to earn those extra rewards? Here are the three main ways people do it. First, you can become a liquidity provider. Decentralized exchanges like Uniswap or Curve are built on something called liquidity pools, which are just big pools of token pairs, like WBTC and Ethereum. You can deposit your WBTC and an equal value of ETH into one of these pools. In return for providing that liquidity, you start earning a percentage of the trading fees every time someone swaps between those two tokens. Second, and this is where it gets really interesting, is yield farming. On top of those trading fees, a lot of DeFi platforms will give you extra incentives. They'll actually reward you with their own platform tokens just for keeping your funds in their pools. This is what's called yield farming, and it can seriously boost your returns. It's like earning trading fees and getting bonus stock in the company at the same time. Third, you can use your wrapped tokens for lending. On platforms like Aave and Compound, which are basically decentralized money markets, you can deposit your WBTC and start earning interest right away. Other people can then borrow your WBTC, and you get a cut of the interest they pay back. It basically works like a high-yield savings account for your crypto. If you're finding this breakdown helpful and you want to keep learning how to navigate the world of DeFi, do me a quick favor and hit that like button and subscribe to the channel. It honestly helps a ton. Now, it's really important to know that these rewards don't come for free. There are definitely risks involved. With wrapped tokens, you're trusting the custodian, in this case, BitGo, to actually keep the underlying asset safe. That's called counterparty risk. Then there's smart contract risk. A bug or exploit in a DeFi app's code could put your funds at risk. And if you're providing liquidity, you have to be aware of something called impermanent loss. This is when the prices of the tokens in the pool you're in change significantly, and you could end up with less overall value than if you had just held the two tokens separately. Always do your own research before jumping into anything. So, your crypto doesn't have to just sit there collecting digital dust. By using wrapped tokens like WBTC, you can move its value from one blockchain to another and put it to work in DeFi. You can earn trading fees by providing liquidity, get extra rewards through yield farming, or generate interest by lending your crypto on platforms like Aave and Compound. You're essentially turning a passive asset into an active one that can generate income. What's the first wrapped token you're curious about? Let me know down in the comments. Don't forget to subscribe and turn on notifications so you don't miss the next video. Thanks for watching, and I'll see you in the next one.